Audio morning brief for the U.S. stock market, 8:43 a.m. Eastern Time, December 4th. I'm Rich Paz for Critical Point. The level 4 trend is down for the major indexes like the Dow Jones, NASDAQ, S&P 500, but it's also due to bottom sometime today, and it can bottom this morning. Unfortunately, it can spill over into early tomorrow, and I'm not finding any way to actually forecast can it extend, when will it extend. But just warning, we could see selling spill over into tomorrow. Otherwise, looking for a turnaround day, meaning down and start up, and really the level 4 trend ought to be up next week. I shouldn't call it a trend, just a swing. Level 4s are intra-week pops and drops, and sometimes they don't spill over in the next day. They're actually the biggest move during a day. At any rate, I still think in the futures we have upside potential 46.10 to 46.33, but we're also experimenting with some upside objectives for the S&P 500 cash that now matches earlier additional S&P 500 upside objectives. And let me get over to the daily chart quickly here and show what those objectives are. I think it's in the 46.30s on up to about 46.70 maybe, if I can adjust my chart here, and 46.53. So that matches what we came up with late last week for the futures. And the futures should be whittling away at the premium coming down to cash. So I'm pleased to see the cash coming up with pretty much the same upside objective. Now, if we see it trade below Friday's low at 4554.71, that is problematic for what we're anticipating for level 4s and level 3 trends. But it's meaningless information in the sense of, is there a problem for the larger up move this month into next year and whatnot. But so that low, Friday's low is near the 5-day average, okay? So we want to keep an eye on it. That yes, it can back off of that. Let me flip over to the futures now. And the futures 5-day average is around 45.76. It's fluctuating, of course. The market has been as low as 45.81. I think that's good enough pullback to the 5-day average, but I can't rule out pulling further to test it, even break a little bit below it. I also noticed the 5-day McGinley dynamic has been dragging its feet through much of this rally here in the last several days, as though it's trying to forecast a rollover and a top. And now it's starting to speed up as though it's more sensitive to the upside that we saw late last week. I think it's trying to say that it's just lagging from a level 3 bottom last week. Now, level 3s are the larger up moves up and down during a month. It's how we do business for a month in practically all free market, liquid, active markets, large markets. And I like how the daily indicator, my favorite daily indicator, did turn to the buy side late last week. It's following through this morning. I think this level 4 downswing's not going to last that long, even though it can spill over into tomorrow. I think it bottoms today, okay? And I think it's going to bottom near the 5-day average, a little above it, a little below it, at it. So I think downside's quite limited. And the reason is I think last week we found a level 3 bottom, quite confident of that, in fact. So what we don't want is the market to trade below that low, which is at 544.75 for the futures. And you may recall we got trapped a little bit on the 547 breakdown level, and I warned you it might be a fake out. It might not be a bearish signal, and that's what it turned out to be. It immediately established a level 3 bottom. They didn't find enough sellers to follow through. They became concerned they were on the wrong side. They bought it, and when they bought it, they found out others were waiting on the sideline to pounce on it and bought it as well, and we had a pretty good round of buying by the end of last week. Now, so we know we have that level 3 bottom. The model's projecting probably won't see a bottom for maybe another 2 weeks, some kind of setback. This is suggesting the market may not be all that concerned about the jobs report due this Friday, that there's not going to be much downside out of it. And it may also mean next Tuesday, Wednesday, when we get the inflation report and the Fed Reserve event, that we're not going to see much selling out of it as well. So a little bit of a clue that we may not have enough bearish information coming for this market. It's just too strong. And there's even some people on Wall Street now stating people may not understand just how strong this market is, how high it's going for how long. And it's shaping up that way, okay? So I like the fact that last week we can move the level 3 top of the prior week to last week's high. It was just ahead of the level 3 bottom. That's usually a bullish posture. And then the market rallied above it last week, triggering additional upside objectives. And for the moment, we'll just stay with the 4630s on up into the 4650s futures and cash and take it one step at a time. But if by chance the market trades below last Thursday's low, I think it was, I'm calling it the low of the week, level 3 bottom, then we got to reevaluate that things may be slipperier than we thought. Maybe the Santa Claus rally won't be so well. Maybe there's going to be some issues into early January before the next leg higher of the long-term bull market. And we are in a long-term bull market, okay? Now, so best stance is to still be friendly, still be bullish, because this market may rally into next week and then set back for level 3 bottom, but I'm thinking a little bit later, and I'm just thinking this data and these reports, these events that are coming this week and next, just aren't going to be all that problematic. Now, I didn't update on the PMI that came out last week for manufacturing. We have PMI services coming out this week ahead of the jobs report. I don't think people are paying that much attention to it. It does show still sluggishness. It's almost like manufacturing has been in some weird recession for a year now. And I don't think it's a true recession, and it's obvious it did not spill over into the overall economy. We have not been in a recession. We've been in some weird times, okay? And it still looks like the PMI will improve next year along with GDP, and the economy will continue to grow. But that is another piece of news or data that may be coming out here for some people to think about. But again, I don't think it's really all that important. Now, the gold market was rather explosive last night. It was up like $51. They really punched through and got a new record high. And hopefully I warned you in a timely manner here of something's wrong with the long-term forecast, and it can be bullish. And even though I see a lot of sideways over the next year or two, it wouldn't surprise me gold can be higher still when looking out the next 2 years. I don't think this is a negative clue for the stock market and economy. I think this is speculation. I almost feels like this is those moments of the better bull market, especially when I think back in the 2000s, better bull markets when people are saying, I'm buying stocks, but I need to buy a little gold to go with it. And we just got the right supply demand to be rather tight, and the normal demand there, the gold bugs are going to buy anyways, no matter what the price. It just tightens it up enough that you bring in that little bit additional buying, and it just makes it pretty vibrant, robust. I don't think with crude oil, it should bounce some, but it acts pretty sluggish. I don't think OPEC can control it. Don't think they're going to give us problems. Bitcoin is still soaring high. Turned out to be the long-term bull market after all that I had forecast at the end of last year for this year. And I had my doubts at times, but it looks like it's worked. And the interest rates are still going to be sensitive input for the stock market at times. And I can see interest rates can stay up all day into tomorrow. That may be a sign why the stock market can go down in tomorrow. But I'm also picking up some relationships there and some patterns when maybe interest rates don't go up much at all today, and the stock market can turn around and go up in tomorrow anyways, even if interest rates don't back off. But ideally this week, we should see some additional backing off of interest rates unless the jobs report interferes. However, as I look out towards the end of the month, I still say stable to lower interest rates, stable to higher bond prices. And I think that's supportive of the stock market. I'm still forecasting the stock market to be up into the end of the year. Okay, and I'm still bullish long-term for next year. And the Santa Claus and seasonal people, even though some are targeting December 22nd into January 2nd, some are targeting after December 25th into January 2nd. And then there's still others that are saying, yes, early December can be sluggish, a little bit of problematic for us, then bullish. There's still others that are just bullish. And keep in mind that largest seasonal that people follow is they like to be bullish from October into late summer, or at least into May. And I think they're doing it. Okay, I think this is a very bullish market, but they've run it so far so fast. We do have to consider there can be some sizable 1-2 day setbacks. There ought to be a down week once in a while. There can be some issues along the way here. The way this is aligning, it's saying be bullish and assume the bearish news will not make the impact it once made, especially over the last couple of years, okay? And that the bullish news can make a bigger impact, and that we may well see more bullish news than bearish news over time. We don't necessarily have to, believe it or not. We can have 50-50 or even slightly more bearish over the next several months and still see the stock market rally anyways. So the bears are the ones that are just going to find it difficult to hang on to anything and make something stick and make something to work for them. At any rate, let's see what we get here throughout the week going into the jobs report. And obviously we have to consider next week for the inflation report and the Federal Reserve. At any rate, today, yes, the stock market can be down all day, but it's already set up to be even bottom this morning. Okay, and obviously if it takes out the Friday's high, the high of last week, that's just additional evidence we're right. The level 3 trend is up, and the larger level 2, level 1 trends are probably up in at least the week of December 18th, more likely into the end of the year, if not early January. Okay, I don't think we're going to see any significant selling until we get into January, and then it'll just turn bullish again. However, we do want to look out for maybe some tax selling going into the end of the year that could interfere, but it's looking like even that probably would only cause a down day or two if it's sizable. Otherwise, it might just cause a little bit of sluggishness and slow the pace of the rally for the stock market. But overall, it still adds up. Bullish into year end. Past results are not necessarily indicative. Future results. Have a great day. Thank you. Also consider that the the equal weighted S&P 500 index actually surged on Friday. To me, it looks like there's a little relative strength there. And then the percent stocks above the 200-day average for the S&P 500 rose again, actually put in a better week than the prior week. And then, of course, it's been straight up for, five, I think we're working on week 6 here for this rally in the stock market. And granted, there are statistics showing this is getting extreme and can have a down week before moving higher. But overall, I look at that percent of stocks and then look at that equal weighted S&P 500. And I really think we were seeing rotation last week when they were dumping some of the high-priced stocks in the NASDAQ, spilled over into the S&P 500, but did not spill over into the Dow Jones. Then we saw them not putting the money into cash, but actually pumping more money into those other stocks that have been dragging their feet within these major indexes, and that did spill over into Dow Jones, making it the stronger, the leader, okay? I think this healthy bullish rotation, when they take profits out of some of the stronger ones, put it in something else, and the money doesn't leave the market, it actually supports the overall market. This must mean they're feeling more comfortable that they need a greater, wider range of stocks in their portfolios, that the future looks bright and they're going to play it. And I think that's a long-term indication at the moment. Now, I'm also seeing people talk about some of this money market money. They don't think a lot of this sideline money is really pumped into this market yet. And so they say as long as they don't see a sudden surge or whittle away, so you can see evidence a lot of money moved in the stock market, they think this market has a lot more upside to it, to get it high enough where people suddenly panic at the minute they've missed out too much. Then they get nervous and maybe there's going to be a correction in the stock market. Thank you.